They want to know how they can legally minimise the amount of tax they have to pay or even maximise their refunds.
At the moment, with some of our clients, we've noticed that they haven't been making as much contribution into superannuation.
Okay, so that's a big one, is it? Super.
Yes.
Is that your go-to with superannuation being the be-all and end-all, and definitely exhaust that at all costs before anything else?
Well, I wouldn't exhaust it at all costs.
Yeah.
Now, firstly, we've got to look at it in terms of a cash flow perspective.
Yeah.
To say, do they have the funds there in order to be able to make that contribution first? And have they taken up those contributions that could have been made all the way back from 2019 till now?
Catch-up, massive.
Exactly.
So are you finding like your clients don't know about the concessional catch-up or don't know how much of the space they've even used this financial year? Like they really need a tap on the shoulder to do that to minimise their tax obligations and of course boost their super.
Yeah, absolutely. So I think with coming into say midway through May, it would be a good idea to get some advice with your accountant as to how much contributions have been made so far. If there's top ups that need to be made up to about $27,500. Yeah. So that money needs to be actually contributed into the fund and deposited by 30 June through the clearinghouse. So if it's not, unfortunately, it won't be counted for that particular year. Yeah. But you will have to go and fill out a notice of intent to claim form, and that has to be sent through to the superannuation fund. Yeah. They have to issue.
So if I want to claim a tax deduction this financial year, say my salary only takes me up to 20,000, I realise I want to put in an extra 5,000 for simplicity's sake. So I need to notify the ATO and the super fund this financial year that to get that tax deduction this financial year.
Correct. So you have to receive that letter from the superannuation fund to say that they've received the funds in order to claim that deduction.
Okay, so I mean that's a big one. I mean obviously superannuation, it's such a knowledgeable topic of everyone. I find a lot of our clients aware of what cap space they have left, and as long as we're doing the investing for them properly. But is there anything else that your clients are looking at you for to really maximise their tax position before June 30?
Yeah, absolutely. Like prepaying some expenses before 30 June.
What are some common expenses people prepay?
Insurance policies, making them paid up before 30 June. Also some subscriptions that may fall into the next financial year. If you can pay for them prior to 30 June, that would also help their position as well. Donations to make those tax deductible donations. You've got to be mindful as well.
Do you have any of your clients that do tax deductible donations?
Yeah, definitely. We've got some clients that would make tens of thousands of dollars worth of donations, but they've got to be a deductible gift recipient and registered in order to get that deduction.
Okay. What are some favourite charities that your clients do?
Beyond Blue, Red Cross, Make-A-Wish Foundation, all those sorts of things.
That's good advice. So do you sort of like take into account their cash flow position, or do you just ask them, look, do you have capacity to pay for this upfront before the end of the financial year? Yeah,
we'll ask the question in probably mid-May to say, hey, look, if you haven't otherwise made those donations, did you have the capacity to make that payment? We'll look at their tax position and say, hey, you can definitely use these types of deductions in order to help your situation at the moment when we do the analysis.
That's good forward planning. Okay, so we have concessional catch-ups, salary sacrifice in the super, or boosting your super in general, prepay subscriptions. That's something everyone should be doing if they have the capacity to. Is there anything else that your clients are looking to do before June 30?
Yeah, so another one would be, say, private health insurance. Yeah. So taking up private health insurance if your income is over a certain threshold. So if you're a single, that's $90,000. If you're a couple, that's a $180,000 threshold.
Getting private health insurance has some tax benefits, but can you just explain to me exactly what if I don't have, I've got a family, and if I don't have private health cover for my family, what would the taxation consequences be for me?
If your income as a family unit was over $180,000, and you didn't have private health insurance, you'll get an additional Medicare levy surcharge, which you'll need to pay. So and that will be assessed when you do your tax return. They'll put a Medicare levy surcharge on top of the usual 1.5% Medicare levy that you need to pay.
So is there a standard figure on how much that levy is, like if you don't have private health insurance?
It would usually be an additional 1%.
Right.
Yeah. So what I would suggest would be to just check what your income levels are as a family unit, or if you are a single, and just to make sure that you've got adequate.
Well, it's just private health cover is it's so expensive. I mean, of course, there's taxation benefits, and obviously, if something unfortunately bad did happen, you're going to want it there. But I mean, when you think you're healthy, you're unstoppable, and you just think, gosh, this is a massive expense, okay? So we have private health, prepay subscriptions, bolstering your super. What else do we have?
So we've got other ones as well for, I guess, investment properties. Now, if you've got an investment property and you don't have a depreciation report from a quantity surveyor, it would be pretty advisable to actually go and obtain one.
It has to be from a quantity surveyor.
Now, being mindful also how old the property is. Now,
Yeah.
if it's less than 40 years old,
Yep.
definitely you'll get some benefits there, where
Yeah.
you'll get that, I guess what they call...
Yeah, but if someone's put in like a new dishwasher or fan or some carpet or something like that, they'll get some depreciation back.
I guess with the quantity surveys report,
Yeah.
they will itemise
Yeah.
all those things and they'll give you an exact figure
Yeah.
that you'll be able to claim year on year.
Mate, depreciation is my favourite tax deduction in the world. I call it the Donald Trump strategy because I don't know how many people know, but you don't actually have to make a loss, right? You can be making as much money as possible from that property, or your assessable income could be bananas high, but depreciation, you don't actually have to make a loss, and it's going to lower your assessable income. I think, in the States, Donald Trump sort of, as we know, property developer in New York, builds expensive buildings, leases pretty much the whole building and gets huge depreciation
Yeah,
schedules. So
yeah.
despite having a good income, he's not paying any tax, which was the whole riff at the last election. Anyway,
That's
I got
right.
a little bit distracted, but anyway, depreciation is one of my favourite
Yeah.
tax deductions.
I would definitely recommend, look, it could vary in terms of price range for how much it'll cost to get the report.
Yeah.
It could be up to about $750. You can
Yeah.
probably find some. There's definitely some good companies out there
Yeah.
that they can use, and you'll get a real good benefit
Yeah,
out of
yeah.
that as well.
What are some other benefits with investment properties that your clients seek advice from you to really maximise that deduction leading into June 30?
Another one would be paying the interest expenses
Yeah.
earlier. For instance, if you're making more payments down on the interest component
Yeah.
of the loan for an investment property, we'll be able to use that to claim tax deduction as well.
Yeah,
So-
not the principal portion of
Yeah,
it.
correct.
So with clients of yours, because obviously it's an established business that have investment properties, do you give them advice to only pay interest and not the principal, or it's just at their discretion?
It depends on what we're looking at. If we're looking at how much of a deduction we're going to get, well, that would obviously be advisable to pay down more of the interest component.
Yeah.
If we're looking at it from a cash flows perspective,
Yeah.
well, then that may be a different sort of situation, a different type of
Yeah.
discussion we'll have to have
Yeah.
in terms of whether we make just the minimum repayments
and-
or make any more.
Yeah, and whether they have their non-deductible debt still there. For our clients, they're going to buy 1, 2, 3 investment properties.
So the stage 3 tax cuts, that was obviously implemented by the Albanese
Yeah,
government.
yeah.
So there are some, favourable adjustments now to the tax rates personally,
Yeah.
Which will, I guess, affect a lot of individuals across the board.
Give me the actual dollars. If the average, punter out there, combined household income of 250, how much money are they actually going to get back in their bank account? It's a hard question, but just summarise it. How much will they get back over, say, the course of 12 months?
The top marginal tax rate has the range is extended from 180,000 to 190,000.
Yeah.
So the rate hasn't changed at 45%.
Yeah.
It captures more people that are within that $10,000 band at
Yeah.
the top there
Yeah,
to
so
be
they're
brought
not
into
paying
the
that
lower.
excess on the 11%, but
Yeah.
rather on the 30%.
In terms of dollar figures, we'll probably have to look at
Yeah.
case by case.
It's really exhaustive, some of those pointers you gave me leading into June 30. From a financial advisor's perspective, the strategies need to be set up long before June 30 to not only get the full benefit, but just make sure they're executed in time. What are some of the things that you're telling your clients to be aware of for the next financial year to make sure it's a good year tax-wise?
We would advise to make sure you've got a up-to-date accounting system. At the moment, that's cloud-based,
Yeah.
and that's able to be linked with the tax office for single touch payroll purposes,
Yeah.
etc. Now, that's one way of managing your business,
Yeah.
your cash flow, is to make sure that you've got the right systems in place. Consult with your accountant well in advance to be able to, try and maximise those deductions as
Yeah.
much as possible,
Yeah.
and just ask the question. If you've got any questions, just ring your tax professional, and they'll be able to answer those questions
Yeah.
for you.
It's good advice. So one thing that we're implementing for clients is turn or debt recycle. So if they've got enough equity there, take equity out of their non-deductible debt, turn that into a deductible loan and use that to invest into whatever it might be, even utilising the concessional catch-up rule or shares or an investment property. Do you see much of that, or people asking you about that? And
They are, yeah. Clients are asking about is, hey, I've got a lot of cryptocurrency at the moment that I've got a lot of gains with.
Cryptocurrency.
Yeah, and
right.
that's an interesting one
Yeah.
at the moment. And they're saying, well, what should I do about, I'm sitting on a gain that's
Yeah.
unrealised, and I don't know when to sell at the moment.
Mm-hmm.
I can't give the advice as to when they should sell, but the notion would
Are they
be
held personally?
to sell those types of investments
Yeah.
when you've got lower taxable incomes.
So when's that going to be? Because at the start of their career or the upward trajectory
Yeah.
with their investing journey, so they're going to have to wait until they're in pension mode.
Correct.
It might not even be around by then.
We're trying to discuss what sort of structure should you be buying these investments through.
Yeah.
Should they actually be held personally,
Yeah.
because if someone's marginal tax rate is over the 45 cent mark,
Yeah.
it might not be a good idea to actually buy these
Yeah.
things in their personal name.
One of the biggest things that I guess advisors, accountants, lawyers can do together to help people moving forward as far as tax planning is getting the right structure in place. We're moving beyond, I guess, what I wanted to talk about. Let's talk about that next time we catch up. But
Absolutely.
yeah, there's a couple of things that I need to implement before the end of June 30. Make sure I've set up for the next financial year. Thanks for joining me, Daniel.
No worries.